Hello, everyone. Good evening and happy Friday. I'm guessing everyone is looking forward to the weekend and trying to wind down. We will try to keep this conversation light, interactive, and honest as much as possible. We have a great gentleman today for this webinar today, Sonal, who is part of 314 Capital, which is one of the most reputed fund based out of India. Probably one of the fund which has the highest vintage in terms of number of funds it is running. So I'm quite excited to have this conversation with Sonal. 314 also has created quite a bit of success stories as a fund, and we'll talk about that.
Thanks to the GTM Dialogues community for having me. I'm looking forward to this interaction, and hopefully a lot of you find it helpful, just sharing our perspective. So my name is Sonal. I'm a principal at 314 Capital. We are an early stage firm based in Bangalore. We are investing from a $200 million fund. We're a sector agnostic firm. We back companies with up to $5 million with our entry check. We lead the rounds that we participate in, and we bring high conviction to the table when we meet very high quality teams in the right markets. So very little boundaries outside of that. We've done everything from the largest online meat company in India, which is Licious, to one of India's fastest growing brokerages, which is done. And more recently been involved in companies like Smallest, Webless, Simplify, and so on that Saurabh just described. I am an engineer by background. I started a company in 2015. Was not able to hit any kind of PMF. We eventually got burned out because we were just fresh grads out of college, and I was actually building in SaaS. So that's an area that is very dear to my heart. That's an area that I've been investing in over the last few years. But that experience taught me a lot, and it gave me the right kind of perspective to empathize with founding teams, and that maybe is part of what's been a secret to the how I've been able to resonate and work with teams well. Like coming up on 10 years is a big milestone, obviously, but it's also I've been fortunate to be part of that journey and see the ecosystem evolve, our firm evolve, and see myself and all the founders that we work with closely also hit tremendous milestones. So once again, looking forward to this interaction.
So let's switch gears a little bit and let's move to let some of the founders ask questions. We have a couple of founders who have shown very strong interest, kind of talking and interacting with you. Maybe we can start going one by one.
Hi, can you hear me?
Yes.
Yeah.
Okay. Thanks. Thanks for inviting me here. Hi, Sonal.
Nice to meet you.
Nice to meet you too. And so I am the co-founder of this platform called Neo Recruit. Yeah, so it's a end-to-end AI first hiring platform, right? From sourcing, CV screening, interviewing till the final offer is kind of rolled out, right? So they have had good traction, etc. My question would be on how you are kind of evaluating conflicts, right? So what we are doing might not be directly conflicting with your investment in something like Darwin Box, but even though they are a HRMS platform, they also have ATS embedded within their systems, right? So when you are evaluating a deal like ours, right, potentially, how would you kind of look at conflict?
So few ways, and I may not be very comprehensive, but I'll let me start here. But so take Darwinbox for example. If Darwinbox has a certain feature, given the scale they're at, and this is an investment that's now close to 10 years old, it doesn't make sense for us to still hold on to a conflict, because any new company is much younger, has a very different point of view, and is starting off at a very different place. So their Darwinbox itself may not see you as competition, given your scale and their ability to like their relative scale. Secondly,
Okay.
we may have so that's one dimension that we think about. Eventually, if there's enough distance between when we made the investments, it's no longer viewed as a conflict for us internally. The second thing is that if two companies are very close together and very likely to overlap, uh, there where we will put up our hands and say, sorry, we will not be able to do this because very likely someone else from the portfolio is working on this as an extension of what they're building. The other way that we think about it is that there is a unique take in terms of either the market or the customer segment that they're going after. Then certain categories have room for multiple companies to be built. NBFCs and financial services is a classic. That's an area where we are, you can't rule out an investment purely because these are financial services companies or they have an NBFC license. There we're open to backing companies within the same space. So again, it comes down to that subjectivity. But conflict has not been a strong reason for us to not do it. We obviously flag it to portfolio companies and say this is what we're going forward with. We have an honest conversation when it comes to why we'd like to take it forward and how we think about it as different. And it's so far not been a problem for us going into any investment.
Okay. And if I can ask one more question, this would be about your AI strategy, right? So most of the traditional platforms that are out there are trying to kind of morph themselves into an AI platform, right? So if you kind of think about ATSs of the world, they are also trying to kind of embed AI into their systems and trying to kind of compete into areas that we are trying to get into. Obviously, we have a first mover advantage because we have been building AI first for like more than a year, but they will obviously catch up because they have a lot more capital and things like that, right? So when that is the case, how would you kind of look at it from a moat perspective? Is it going to be on the proprietary data that we have, the AI process that we have, or the stronger distribution or network effects, right? So how would you kind of analyze when you kind of look at an investment like that?
For most cases, what we've seen is that old companies, existing companies, incumbents that add capabilities, it's down to you just have to. In some cases, maybe certain things are features that you can easily extend, but there are other things that are not so easily extensible. These are something that you have to reimagine the interface around, the capability around it, and redesign the org around the whole thing. Your business model may need to change. How you acquire users and what your USP is, that may need to shift. And that may not be as much of a may not be as appealing to someone who's making enough money on their core product to make such a radical change around it. So certain things end up being more feature extensions that are much easier to tuck into existing products, and certain other stuff doesn't end up there. Obviously, everyone has to try because, like I was saying, we think of this as a tool or an extension of every platform. So every team is thinking about how to do things differently now that these capabilities exist. But we think there's always these moments where, for example, mobile and internet and SaaS and now AI create the opportunity to form new companies because the way the product works, the way to get the job done, we can offer something brand new as an experience around that, and that we think is the compelling opportunity.
Okay. Yeah. Thanks for that answer. Yeah.
Thanks, Narayan. So the next person is Shrikant. Amay, if you can let him in. I also request people who are joining in, if possible, and if comfortable, switch on their videos. It's always good to put a face to a name and make it more live.
Hello. Hey, Sonal. Can you hear me?
Yes,
Yeah.
Shrikant.
Okay. So basically, I'm Srikant. I'm a founder or co-founder of SI6, and I'm an ex-SAP, and we worked in consulting for a long period of time, around 7 countries, particularly around the HCM and the education vertical. So looking at all of those learnings, we realized there is a need for the industry cloud solution for enterprises who are in education vertical. How do I define? It's more like where you have multiple campuses, like Cambridge International or many foreign university with multiple campuses, right? Where they have global operations and also need for a strong ERP. The challenge where we tried to find out was, typically these ERPs are not meant for the education. They're meant for mostly for manufacturing and those kind of organizations. And that's where we embarked on a journey, and we have actually bootstrapped and completely built the product ground up. And we've also delivered a project in Senegal along with SAP, that's in West Africa. And we have quite a good pipe in the US, Canada, and Iraq. And struggling in India, we work with our GTM is through the SAP and SAP partners globally. We don't have any sales folks. My question too is, how do we amplify? One, primarily, what the challenge we are facing is the sales cycle in this vertical is like around 9 months to 12 months, right? And because we are a bootstrap, and we are also struggling because we are getting a lot of inquiries from all the SAP partners. There are no industry specific solution partners in the whole of SAP ecosystem. Right. So question is, how do we amplify and where do we go from here?
Say you're an ERP provider to educational institutions.
But we're limited to the student information system kind of it, right? We only manage the applicant from first touch point to the alumni, and we latch on top of the SAP as an add-on, which is SAP also been approved and it's sold to the SAP marketplace. So there's a trust for all the SAP partners as well.
Got it. Bit of a tactical question. I don't know the industry so well to be able to tell you how acceleration would happen. I assume, do you have to wait for SAP to be implemented for you to go in, and that's one of the bottlenecks for you, or is that not the case?
It's not the case. We are an ERP agnostic, but we work very closely with the SAP ecosystem. We know the market very well. We know the white space in it, and that's where we primarily wanted to go with the ERP as an SAP. So it fills the backbone, and there's a lot of partner ecosystem which are very well known. We try to work with the Microsoft, but there's already an existing lot of marketplace and small vendors. So it's a consciously business call we've taken to go with an SAP to start with.
Got it. So what I can think of is there's like some realities of every industry, right? In terms of how long it takes to crack a customer. In some cases, you absolutely need a channel partner to make things work. It doesn't make sense to take on that effort of going in and finding access to that customer directly and going in and getting embedded. So that's just cost of doing business. That may mean that there's a certain amount of timeline also associated with it. So that's the reality of the industry. Obviously, what you can do is diversify, work with more partners, go to different geographies and see if reality is different. The other way to say it is if this is the reality of the industry and you find that the business is too slow, then what are the other adjacencies that are possible for you to sell into it, where either you index on the SAP ecosystem or the customer persona that you're going after, or or maybe the product capability, and we extend that as a way to make sense of this slow sales cycle. Ultimately, for you, once you're embedded, hopefully the annual revenue and the cash flows are worthwhile, and that gives you some more optionality in what you do next. Those are the kind of options that I can think of, but I think this is much more of a longer discussion to understand that ecosystem better. It's not one that I know very, very well.
Right.
Yeah, great. Thanks, Shrikant, for your time. We'll move on in the interest of time. Kishore has dropped off, but the next person is Atul, and we'll invite him. Atul, Amay, if you can bring Atul in front of us and request Atul to introduce himself and ask his question.
Thank you very much. And my question is like launching the product in US, and our product is like Salesforce Agentforce, which we have built proprietary stack for SMEs right from the scratch. So we have raised some funds, we have done the GTM engine in India. But of course, if I work on the cash flows, it's not going to work in US. So my question is, what's the take of, let's say, VC in terms of thesis? At what stage do you support the startups? And to make like one constraint that we have, like if I, like many companies, then as my earlier, peer said, morph, like even the earlier companies morph the service company into something like AI, which is not AI first. Given all margins that we want to keep targeting, like 77%, we don't want to morph services into product. So question to you, like at what stage you allow and support startups to go into US with the money, like, to go to for the GTM? I saw a smile at your face, maybe something unique you're thinking.
I heard a few questions in there, Atul. I think what you were asking, as a fund, we're an early stage fund, so we're not making like we've invested in companies that are pre-product, and obviously that means they're pre-revenue as well. So in that sense, we're not making a strict distinction about saying come back with revenue. In some cases, maybe it makes sense based on competition and the reality of what they're building. So that advice may be different, but we've done plenty of companies pre-product to say that that's not a strict filter. In terms of supporting companies to go to the US, again, it depends on what go-to-market strategy makes sense for that business category. In some cases, we may say despite you focusing on the India market, for example, we like it enough for it to be a large for us to invest, and we want you to explore, go beyond the India market as a part of that whole exercise. The thing I know is on services versus product, I think it depends on the category, who you're competing with, and so on. If that's what it takes to win a customer, then I think having an element of services just to get started, if that is table stakes, then either we find a way around it and you have strategy that can solve for it, or you have to compete on the same terms and outdo the rest of the field by identifying some niche, whether it's a geography, a territory, a customer persona, a use case where you can do things differently. So, yeah, that's the most generic advice I can give you before getting into what exactly you're doing and who you're up against and so on. But I hope that answered some of your questions.
Yeah, generically, Sonal, but just like if you're allowed to be a little honest, like I found like VCs either go for pedigree or directly the revenue. And then what that means for founder is to morph the services into look like AI. And that's the only option because of work, my cash flows, it's not going to work like. So question is like, it's not even too much of innovation. It's like GTM engine to be built for US. And I haven't seen VCs, at least for now, unless you have pedigree, come from Stanford and like, you have the LLM researcher. And then, I mean, generically VCs can say like, we come with pre-revenue, but never happens. I've never seen like, practically, unless it's like you get to have hang off somebody in Stanford who's gold medalist. But let's leave the outliers. The question is like, will you support the Indian founders on the GTM very specifically? And GTM dialogue, I see the smile on his face, so he knows the money will flow to him. So would you support?
I mean, if you we have supported companies in the past, and yeah, that's without GTM. Like I said, that's the biggest dimension. If a team has no unique insight and capability on the go-to-market side, then everything else that you do is meaningless and worthless. So obviously, that GTM part of it is something that we index on very, very heavily. So yeah, I'd put it that way. And to your other point around on pedigree and who gets supported and so on, I think every investor is looking for what kind of unfair advantage can they tap into. It's not exclusively a question of is this person from Stanford, but what is that unique combination of what this team can do that can make a difference, because it is a competitive world, and ultimately you need people have different points of view on who's likely to win. So not speaking for the broader market, but that's exactly what investors are looking for.
Take it as partially yes, and Saurabh is happy. If you support on GTM, the money goes to him. So thank you. I'll close on that part.
Thanks.
So,
Thanks. I think there is also a very similar question that has come from Sanju, and I think you have to an extent answered as part of this conversation, earlier conversation. The comment is that you said Sanju is online, is it?
Yes.
Okay, maybe I'll let him. Hi, Sanju. Long time we have connected, but maybe best that you introduce yourself and ask your own question. We can't hear you, Sanju.
Hear me now?
Yeah,
Now it's
perfect.
turned on. Okay,
Yeah.
great. Hey, thank you for allowing me. So I'm into this product, which is so I've been in with BMC software and many other IT ops related software for more than 25, 30 years. So whenever there is an alarm that comes from a monitoring system, we it takes 20 to 25 minutes for a L1, L2, L3 person to collect data and then say this is the root cause of the alarm. So that collection of data and using LLMs to do the analysis is what we are doing. We are not training any new LLM, but we are just figuring out how to answer the question within 2 minutes. Okay, instead of taking 20-25 minutes. So this is big for like Saxo Bank or Make My Trip or any of these large customers where 15-20 minutes downtime is $2-3 million of revenue loss. So this is our thing. We've been in this with enterprise customers from our previous things. And so here, when I was trying to raise money, I was getting from India about $3 to $3.5 million kind of a thing. But my competitors like Resolve.ai and others, they were getting $20-25 million plus. They were focusing on US market. I wanted to start with Indian market because this itself was huge for me. But many VCs asked me a question that after your first initial reaching to $40 million valuation, when you want to grow big, you have to go to US, and that time, how are that US VC is not going to back you because you focused on India first. So how will you go global? Then if I hear your first comment that if this is a software which is anyway applicable globally, like a CRM or other software, then why don't you go global from day one? So I cannot go global from day one because I don't have the cash to do all that sales. So how do you tackle this kind of a situation?
so both of like what you said is true, right? And different people start from different places around the world, and the playing field is uneven. So that's part one. If I said there's 314 here and we're one of a larger fund in India, we'd be a rounding off error in the US market. That's also a fact, right? And certain companies eventually you need enough capital to keep competing because like now people are saying private companies about 500 billion, possibly will get a couple of private companies worth over $1 trillion, and it's unfair, but it's also reality. So what we've seen some companies do, and there have been successes out of Europe and so on, is the local markets, if they allow you to get to a revenue scale that's so sizable, eventually that is proof that this company, this product, this team works, and they deserve they have the right to compete on the global stage, and it's then the money sort of accumulates there. So if someone's able to really make it that far, and they're able to show that things can work, there are enough investors and enough capital out there to say we can take a shot with this because we know maybe it's not all US revenue, but along the way they've grown out enough to give us the signal that this product can go international. So we're always building it with that mindset, saying it's not like, for example, designed only for India in terms of its pricing and its capabilities in terms of its integrations and so on. It gives you enough room to, if you decided you could sell this in Israel, you could sell this in Eastern Europe, Western Europe, and so on, and you're not kind of hamstrung by any other factors. So this is a reality that we also kind of
Mm.
realize is a part of building out of India. It's a factor that we also think about deeply when we back someone, saying, if not now, can they eventually find their way to go global if they have the right kind of building blocks from day one, foundations from day one. So the problem statement is obviously universal. The opportunity that you're going
Correct.
after. So
Mm.
that also gives you the right to build a product successfully and compete on the global scale. So that's how I would put it. Eventually, if a company is scaled up enough, you get the capital to go bigger, because everyone's looking at mispriced opportunities, mispriced companies as well, in order to make their money, and that's what the capitalism opportunity is all about.
Awesome. Thank you.
Thanks, Sanju. Fantastic, Sonal. I think we have crossed our scheduled time, but it was a fantastic conversation. Learned a lot. I think people also enjoyed this conversation. This was our first EMA with a VC, so thanks for becoming our guinea pig in some sense. But we'll keep on finding some or other way an opportunity to stay connected with you, bring you in front of our audience and rest of your team as well. So look forward to our relationship and look forward to more and more such conversations with you, Sonal. Thank you so much again.
Hey, thanks so much for having me, and thanks to you, Saurabh. Thanks for putting this together, and thanks to the entire GTM Dialogues community. Shout out to Amay for helping us set this up.
Thank you. Thank you so much. Thanks, everyone. Take care. Have a good weekend. Bye.
Bye-bye.